Welcome to this deep dive. Today we're zeroing in on Taiwan Semiconductor Manufacturing Company, TSMC.
Right.
We've got a research report from March 2025 and also their Q4 2024 earnings call from back in January 2025.
Okay.
Our goal today is really to get a solid handle on this powerhouse in the semiconductor world, their core business, where they actually stand in the market, and what their plans look like.
Sounds good. So we're basically pulling out the key stuff for everyone.
Exactly, just the essential insights.
Okay, so let's kick things off. Maybe just the basics. What exactly is TSMC all about?
Right. So, in a nutshell, TSMC is the world's biggest dedicated semiconductor foundry.
Dedicated foundry. Okay.
Yeah. So think of it like this. You have companies like Apple or Nvidia, right?
Yeah.
They design the brains of our gadgets, those little chips.
But they don't make them themselves.
Precisely. They're called fabless companies. Then you have others, maybe like Intel and some parts of their business, who design and manufacture their own chips. We call them IDMs, integrated device manufacturers. TSMC, they're the factory for both types, actually. They don't sell chips with TSMC stamped on them. They're purely a manufacturing service, building chips designed by others.
Okay, so they're the builder. Within that massive operation, what are the main areas they focus on, their key business lines?
Good question. They operate across several pretty crucial segments. First up is what they call advanced process nodes.
That's the cutting edge stuff, right?
Exactly. This is the absolute leading edge of chip making. We're talking incredibly small transistors like 3 nanometer, 5 millimeter, 7 millimeter, and they're already looking ahead to even tinier 2 millimeter stuff.
Wow.
These are the technologies powering, high performance computing, all the buzz around AI, and definitely your top end smartphones.
And that's a big part of their business.
Huge. Get this. In Q4 of 2024, 3 nanometer tech alone made up 26% of their wafer revenue.
26% just from 3 nanometer. Okay.
Yeah. And they're not stopping. The roadmap includes 2 nanometers, which will use a new design called Gate-All-Around, or GAA.
Interesting. So that's the high-end innovation. What else is in the mix?
Well, then you have the specialty and mature process nodes. These are a bit more established, maybe think 12 millimeter up to 28 millimeter for specialty things, and 45 millimeters and older for, mature processes.
So not the absolute newest, but still important.
Incredibly important. These chips go into a huge range of products. Think about your car electronics, especially with EVs and autonomous driving features, the Internet of Things, IoT, all those connected devices, and lots of industrial uses too.
Okay. And I remember hearing it's not just about making the individual chips, right? There's something about how they're put together.
You got it. That's their advanced packaging solutions, things like CoWoS and SoIco. Basically, these are fancy ways to stack and connect multiple chips so they work together better, more efficiently.
More performance.
Exactly. And this is becoming really, really critical for power-hungry stuff like, you guessed it, AI and high-performance computing.
Okay, so different types of manufacturing, different ways of putting them together. How does this all break down by the markets they actually sell into?
Right. They look at growth through a few key end markets, high-performance computing or HPC, which is, it's basically wrapped up with the whole AI explosion right now.
That seems to be everywhere.
It really is. And TSMC is right in the middle, making those AI accelerators GPUs, specialized AI chips called ASICs, even the controllers for that super fast high bandwidth memory, HBM, that AI needs, plus the main data center processors.
So a huge driver for them.
Massive. HPC was 53% of their revenue in Q4 2024. 53%. And it jumped 19% just from the previous quarter.
Wow.
It just shows how central they are to this whole AI boom. I mean, the AI progress we see, it's kind of fundamentally tied to TSMC's ability to pump out these advanced chips.
That's a dominant share. What about other big markets, like phones?
Smartphones are still vital. They make the top-end chips for the flagship devices. Actually, that revenue grew 17% in Q4 24, making up 35% of the total.
Still very significant.
Oh, yeah. And the thinking is, as phones get more AI features, the amount of silicon, the actual chip stuff inside, will just keep increasing.
Makes sense. What else?
Then there's automotive electronics. We touched on that, solutions for EVs, autonomous driving. That segment grew 6% in Q4.
Steady growth.
And finally, IoT. Those generally lower-cost chips for connected gadgets, that actually saw a 15% decrease in Q4, representing about 5% of revenue. So a bit softer there recently.
Yeah. And geographically, I heard they're building fabs outside Taiwan now.
They are. It's a big strategic move. They're setting up overseas fabs. There's Arizona. That one's actually already in high-volume production using their N4 process.
And how's it going?
They're saying the yield, the percentage of good chips they get is comparable to Taiwan. which is pretty impressive for a new fab.
Yeah, that's key.
They also have a specialty fab in Kumamoto, Japan that started production late 2024, and there are plans for another specialty one in Germany aimed at automotive and industrial stuff.
Why the big push overseas?
Well, it seems to be driven by customers wanting more geographic options, supply chain security, plus there's government support and incentives in these regions trying to attract chip manufacturing.
Right, that makes sense. And all this innovation, this expansion, must mean a huge focus on R&D.
Absolutely. Research and development is massive for them. Constantly investing, exploring future tech, more advanced lithography, that's the etching process, and totally new transistor designs.
So looking back at 2024 overall, how do they do financially?
2024 was really strong. Revenue up 30% in US dollars. Big driver was demand for those top-end 3mm and 5mm chips.
We saw that in the segment breakdown.
Yeah. And advanced tech 7mm and smaller was 74% of wafer revenue in Q4. That's up from 69% for the whole year. And yeah, HPC was the star performer, up 58% year on year. Just huge growth there.
Okay, solid picture of the business. Let's talk competition. Who are they up against, and how do they stack up?
Right. They're dominant, but definitely not alone. They face serious competition, but they also have some major advantages.
Like what? What's their edge?
Well, technology leadership is probably the biggest one. They're generally seen as being ahead in rolling out these critical new process nodes, like 3nm mass production now, 2nm with GAA planned, and they lead in advanced packaging too.
Okay, tech advantage. What else?
Just sheer scale of operations, it's unmatched in the contract chip world. This gives them cost efficiencies and lets them reinvest huge amounts, market share, over 60% of the contract market.
50%, that's...
Yeah. Dominant.
It really is. And that scale is built on a massive client ecosystem. They partner with all the big names, Apple, NVIDIA, AMD, across tons of different markets.
So a strong customer base.
Very strong. But there's a flip side. Their top 4 clients make up about half their revenue. And Apple alone is over 20%.
Ooh, okay. That sounds like a risk. Customer concentration.
Exactly. It's definitely flagged as a potential customer concentration risk.
Okay. So beyond tech and scale, any other edges?
Yeah, there are intangible assets like decades of manufacturing expertise and their open innovation platform, the OIP, which helps clients design chips for their fabs more easily. Streamlines the process.
Right. And their financial health is solid. Strong cash position, consistent dividends, high return on invested capital over 20%, and pretty stable gross margins, around 59% in Q4.
So strong finances back it all up.
Pretty much. Their cost advantages and being first with the newest tech make it really hard for smaller guys to compete at the high end. And having a wide range of tech helps them ride out market swings.
Okay, those are the strengths. What about the challenges? Things that could threaten that competitive position?
Well, we mentioned the customer concentration. Then there's geopolitical risk. That's a big one, given the situation around Taiwan.
Yeah, unavoidable topic there.
For sure. Also, the costs of global expansion. Building and running those new overseas fabs isn't cheap. It's expected to shave off like 2–3% from their margins each year for the next 5 years.
Okay, so expansion has a cost.
Definitely. Though the impact in Q1 25 is expected to be smaller, less than 1%. Another thing is their reliance on the current AI trend. How sustainable is this super high growth rate? That's a question mark.
Good point. What if AI demand cools off a bit?
Exactly. And of course, competitors aren't standing still. Samsung and Intel are investing heavily, trying to catch up on the tech side.
Right. Let's dig into those comparisons a bit. How do they look versus Samsung Foundry?
Okay, versus Samsung. Right now, TSMC seems to have the edge in both tech and scale. Reports suggest better yields, better manufacturing results on 5mm and 3nm, and their 2nm roadmap looks maybe a bit ahead.
But Samsung has strengths too.
Oh yeah. Samsung has its own huge memory business, which can be an advantage sometimes. And they've also made progress with their version of GAA at 3nm. But generally, TSMC tends to have higher profit margins on the foundry side.
Okay. What about Intel? Intel Foundry Services, IFS. Big ambitions there.
Yeah, versus Intel. TSMC benefits from, well, greater customer trust right now and a really strong reputation for reliable, high-volume production. They're also currently ahead on the most advanced nodes available.
And Intel's challenges.
Intel's integrated model could help R&D and manufacturing work closely together, but they face pretty significant execution risks just building up that external foundry business. It's a complex shift.
Right, it's not their traditional model. And the other foundry players, GlobalFoundries, UMC.
Companies like GlobalFoundries and UMC are mostly focused on more established nodes, specialty stuff, maybe like 28mm and older.
Different part of the market.
Right. Less capital needed, maybe, but generally slower growth and lower margins compared to TSMC dominating the leading edge. And then there's SMIC in China.
How do they compare?
TSMC has a really substantial tech lead over SMIC. Plus, SMIC faces ongoing U.S. export controls, limiting their access to some advanced equipment.
Okay, so summing up the competitive picture.
Looks like TSMC holds a pretty strong defensible position right now, thanks to that tech lead, the massive scale, and those deep customer ties. Samsung looks like the strongest challenger, but TSMC's overall package gives them a significant edge.
Okay, makes sense. Let's pivot then to the future. What's TSMC's growth strategy moving forward? What are the key pillars?
Well, at the heart of it is just continuing that technological leadership. They're pushing hard on advanced nodes. 3 nanometers is in high volume now. 2 nanometers with GAA is planned for the second half of 2025.
And lots of interest in 2 nanometers already.
Yeah, they actually expect more initial chip designs, more tape-outs for 2 nanometers in its first couple of years compared to 3 nanometers, 5 millimeters. So strong customer pull.
And it offers big improvements.
They're saying N2 will give significant boosts in performance and power efficiency over their current N3E, and they're not stopping there. There's N2P planned for late 2026, and even A16.
A16.
Yeah, using something called Super Power Rail for backside power delivery, also targeted for late 2026, specifically for really demanding HPC stuff.
Sounds like HPC, especially AI, remains absolutely central to their growth plan.
Oh, absolutely. They're forecasting AI accelerator revenue to grow at a mid-40% compound annual growth rate through 2029.
Mid-40s CAGR, that's huge.
Oh, it is. And they expect it to double in 2025 alone. Those AI GPUs, ASICs, HBM controllers, they were already close to mid-teens % of total revenue in 2024, and they see it as the biggest driver of new revenue growth going forward.
But they're not putting all their eggs in the HPC AI basket, are they?
No, definitely not. They're pursuing diversified applications, still expecting growth from smartphones, driven by more AI features, more silicon content per phone, and just people upgrading to newer tech.
Right.
And automotive, too, supplying chips for electrification, autonomous driving, using both their cutting edge and their specialty nodes for that market.
Okay. And we talked about geographic expansion earlier. That's clearly a big part of the strategy, too.
Precisely. Building those overseas fabs, partly for customer demand for regional supply, partly for government incentives.
All right.
So Arizona's first fab is running. Second and third Arizona fabs for more advanced stuff are on track. Kumamoto, Japan first fab running, achieving good yields apparently. Second Kumamoto fab construction starts this year.
In Germany.
Dresden, Germany, that specialty fab for auto and industrial plants are moving smoothly. And importantly, they're still expanding advanced tech and packaging capacity back in Taiwan too.
And that advanced packaging piece seems increasingly important.
It really is. CoOS, super critical for HPC and AI. It's a way for them to differentiate and potentially capture higher margins.
Is it a big part of revenue yet?
It was over 8% in 2024. They expect it to be over 10% in 2025. Margins are better than average, they say, though maybe still a bit below the overall company average margin.
And demand is high.
Extremely high for CoOS right now because of AI. Capacity is very tight, but they think other areas, like maybe servers, will start using it more too down the road.
Okay. All these plans, advanced tech, expansion, packaging, must cost a fortune. What's the capital investment look like?
Yeah, it's huge. For 2025, they've budgeted $38 to $42 billion.
Billion.
Yep. About 70% of that is going straight into advanced process tech. They do expect depreciation costs to rise, maybe high single digits % in 2025 as these investments come online.
But the growth outlook justifies it, they think.
That's the plan. Their long-term target is revenue growth approaching a 20% CAGR in dollars for the 5 years starting 2024. Driven by all 4 platforms, smartphones, HPC, IoT, auto.
Ambitious.
Yeah, and they see the broader foundry industry, manufacturing, packaging, testing, what they call Foundry 2.0, growing maybe 10% in 2025. They expect to beat that industry growth rate.
How does this compare briefly to what competitors are doing?
Well, very quickly, Samsung's also pushing advanced nodes and packaging, plus leveraging their memory business. Intel's trying to break into foundry using their capacity and government help. GlobalFoundries, UMC, are sticking more to specialty mature nodes. And SMIC is focused domestically on less advanced tech.
Okay, so TSMC's strategy seems pretty comprehensive, aiming for dominance in the high-growth areas.
Yeah, the analysis suggests strong potential for revenue and profit growth, driven by advanced nodes, AI, diverse markets, and that geographic spread, even with the initial margin hit from overseas fabs.
Achievable, you think?
Yeah, seems highly achievable given their scale, customer relationships, and R&D muscle. Key risks: geopolitics, managing those overseas costs, and maybe diversifying customers even more.
Right. Let's talk more about those challenges, the execution risks. What could go wrong?
Okay, execution risk. In terms of pure technological execution, getting the new nodes working their risk seems relatively low. They have a great track record. The challenge is more about meeting the huge demand for these new complex nodes.
Makes sense. What about building all those new fabs?
Yeah, capacity expansion risks, especially the global stuff, that's higher. New locations mean challenges with labor, efficiency, costs.
Mhm.
That's where the 2-3% annual margin dilution comes from for the next 5 years.
But they feel they can manage it.
Seems so. Strong customer alignment helps, and the geographic flexibility is a strategic plus, but it's definitely a risk to watch.
And the big one, geopolitical risk.
Still significant, huge uncertainty factor due to their Taiwan base.
Right. What else?
We mentioned custom concentration risk reliance on Apple and a few others. There's supply chain management risk depending on key suppliers like ASML for EUV machines, raw materials, energy.
Can't make chips without those.
Exactly. And then there's just the cyclical nature of the industry. Semiconductor markets that go up and down, plus that specific dependence on the current AI boom continuing at this pace.
How do these risks stack up against competitors? Do they face similar things?
Everyone faces some of these. But maybe TSMC is better positioned on some fronts. Samsung, for instance, has faced yield challenges and is still building foundry customer trust. Intel has massive execution risk with their foundry transition and the financial investment needed.
Right.
GlobalFoundries and UMC are less exposed to cutting-edge tech risk, maybe, but more dependent on stability in their specific markets. SMIC has those geopolitical constraints. So overall, TSMC's execution risk seems lower than many peers.
So their experience and scale give them an edge in navigating these.
That seems to be the assessment. Their track record, scale, partnerships, they help manage risk. Handling the global expansion and the geopolitical situation are probably the key differentiators. They seem better positioned for industry ups and downs because of that leadership in AI and HPC.
Okay, let's bring it to the very recent past and near future. What did the latest numbers show? Q4 2024 results.
Q4 24 was strong. Revenue up 14.3% sequentially in NT dollars, driven again by 3nm and 5mm demand. Gross margin actually ticked up to 59%.
Impressive margin.
Yeah, operating margin hit 49%. EPS was 14.45 NT dollars. Advanced tech was 74% of revenue. HPC 53%, smartphones 35%. And for the full year 2024, revenue up 30% in US dollars. So yeah, a good finish to the year.
What are they guiding for Q1 2025 then?
For Q1 25, revenue expected between $25 billion and $25.8 billion US. They mentioned some usual smartphone seasonality, but expect that to be mostly offset by continuing strong AI demand.
And that means strong year-over-year growth.
Oh yeah. The midpoint of that guidance is up almost 35% year over year. Gross margin expected 57% to 59%. Operating margin 46.5% to 48.5%.
Still pretty healthy margins.
They are, and they expect to keep outgrowing the overall foundry industry in 2025. Full year 25 revenue growth expected close to mid-20s% in US dollars.
And that AI demand is really underpinning that outlook.
Absolutely. They specifically said AI accelerator revenue doubled in 24, and they forecast it to double again in 25. And that mid-40s CAGR for the next 5 years, starting 2024, it's clearly central.
Any recent updates on the global fabs? Arizona, Japan, Germany?
Yeah, they confirmed Arizona's first fab is in high-volume N4 production, yields comparable to Taiwan. Second and third Arizona fabs, N3, N2, A16, are on track.
Good progress there.
Kumamoto's first specialty fab is in volume production, record yield apparently. Second Kumamoto specialty fab construction starts this year. Dresden, Germany plans moving ahead and still expanding advanced tech and packaging in Taiwan too.
But they acknowledge costs are higher overseas.
Yes, they mentioned that overseas fab costs are higher for everyone, not just them.
Okay. And technology updates. N2, N2P, A16 timelines still holding.
Yep. N2 volume production still H2 2025. N2P, the enhanced version, H2 2026. A16 with that superpower rail, also H2 2026, targeting specific HPC products. And again, higher tape outs expected for N2 initially compared to N3 and N5. strong interest.
What about the gross margin outlook for 2025, considering all the moving parts? Expansion costs, new tech ramps?
Right. For Q1 25, they expect margin around 58%, slightly down due to N2 ramp costs, Kawas expansion costs, and that initial dilution from overseas fabs starting.
And for the full year?
Full year 2025 will see more impact from overseas fabs ramping up that 2-3% hit, plus higher electricity costs in Taiwan, maybe another 1% hit, and then costs for ramping N2 and converting more N5 to N3 capacity, roughly another 1% impact.
So some headwinds on margin.
Definitely some headwinds, but their long-term target remains 53% and higher, excluding currency effects.
And CapEx plans for 2025 remain huge.
Yes, $38 to $42 billion budgeted, still heavily focused on advanced process tech, 70%, with chunks for specialty, 10-20%, and advanced packaging, 10-20%.
Okay, so pulling it all together, looking ahead, what are the absolute keys to watch for anyone following TSMC?
All right, the critical factors. Number one, still, is the Taiwan-China geopolitical risk. It's the biggest potential threat, no question. Any conflict could be massively disruptive.
The elephant in the room.
Always. Second, the success of scaling the advanced nodes 3 nanometer, 2 nanometers, and whatever comes next. It's crucial for revenue, customer trust. Delays could mean losing share.
Got to keep hitting those tech milestones.
Yeah, absolutely. Third, AI-driven HPC demand. Is this incredible growth sustainable? Is a huge driver now, so any slowdown would impact them.
Watching that AI trend closely.
Fourth, overseas expansion and the margin dilution. How well do they manage costs in Arizona, Japan, Germany? How quickly do those fabs ramp efficiently? That 2-3% annual dilution is something to track.
Right, the cost of going global.
Fifth, competitive pressures. Samsung, Intel. They're pushing hard in advanced nodes and packaging. Gotta watch how that battle plays out.
Can't ignore the competition.
Sixth, general global semiconductor cyclicality. Demand swings in phones, PCs, data centers. That always affects the industry. Seventh, that customer concentration risk. Still heavily reliant on Apple and a few others.
Diversification needed there.
Eighth, export controls and U.S.-China trade issues. Could impact their China business or access to tech. They currently say it's manageable, applying for permits for non-AI stuff for restricted customers, but it's fluid.
Okay. Any other big ones? Operational things?
Yeah, a few more. Rising energy and input costs could squeeze margins. The fundamental technological barriers pushing against the limits of Moore's law, can they keep innovating?
The physics gets harder.
It does. Availability of critical tools, especially those EUV machines from ASML, and just general supply chain stability. And lastly, maybe market saturation in older tech areas like basic smartphones and PCs.
Though AI in those devices might change things.
Exactly. AI integration could drive more silicon content per device, maybe shorter upgrade cycles. So even if unit growth is flat, there could still be growth opportunities there.
Okay, so it's a really complex picture, isn't it? Lots of moving parts.
It really is. Dominant position, amazing tech, but significant risks and challenges too. Geopolitics, tech execution, AI demand, competition, it's all in play.
A truly central company to the entire tech world.
No doubt about it. So there you have it, our deep dive into TSMC. From that incredible market dominance and tech prowess to the very real challenges and the huge potential in areas like AI, it's clear they are absolutely pivotal.
Yeah, understanding them is key to understanding tech.
Definitely. Those keys to watch, especially geopolitics and the success of their node scaling, will be so crucial. Hopefully this gave everyone a clearer picture, maybe sparked a few aha moments.
What stands out most to you thinking about all this?
For me, it might be just the sheer scale and the simultaneous push on both technology and global manufacturing. It's an incredible balancing act. What about the broader implications of that global expansion for the whole semiconductor landscape? That's definitely something worth pondering. This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.